So Saurabh, good to have you here. It's a great feeling to have you across the table because I really feel conversations are best had in this manner. So really appreciate you taking out the time today.
No, my pleasure. It's a pleasure being in a studio. I think I haven't been in a proper studio setting for a while, courtesy COVID. But it's great to get the old conversations going again.
No, absolutely. So tell me, what's been keeping you busy these days? What's new? What's happening at work? Life?
So look, last week we celebrated 5 years of Marcellus. So we organized a party for our clients. Around 300 clients from all over the country flew in. And then that apart, I have to confess, the other part of our lives which has got significantly busier is foreign inflows.
Okay.
So foreign institutional investors have taken a liking to what we do. Some pension funds, some churches, some universities. So there's a fair bit of documentation and negotiation involved in signing up foreigners. So hopefully, fingers crossed, the business will carry on humming in the way it's done over the last 5 years.
Very interesting. So I'll tell you what, for viewers who already know this, Saurabh has been in the capital markets for a long period. I think 15 years, almost 15 years, various capacities. He's been a stock picker. He's been looking at companies for a long time, and now I know, just 5 years back, he started out his own firm called Marcellus. And it's quite interesting. Now you're getting foreign money as well. So now next time on our regular news shows, we'll call you for the FPI voice, right? What are the Firang saying about this market?
Try my best to give color on FPIs. The good thing is the FPI flows are so vast now, Surbhi, that I think even if we account for say no more than 3-4% of FPI inflows, Marcellus will become a giant company. And the bigger story I think is, as I was saying, we're seeing churches and small universities from Europe and America coming.
Why are they coming to India?
I think a big part of it is historically they've been invested in China. They've typically had 6 times more money in China than in India. And as we're reading in the newspapers every day, China seems to be a country in free fall. I think that the rapid descent of China is really what's prompting these smaller foreigners to swing towards India decisively.
Money is looking for alternate homes, at least partial movement of money.
That's right.
And that in China to India sort of shift is real.
Yeah.
It's actually
so $3.5 trillion, basis the data we are getting. Foreigners have $3.5 trillion invested in China and a mere 0.6 trillion invested in India. So if you assume that, say, $500 billion of foreign money swings from China to India, and let's assume this is spread over 5 years, that's roughly $100 billion a year coming into the country.
That's what Nifty at 1 lakh. 1 lakh 20, 1 lakh 30.
I think the market levels are a little scary. I also have to admit, the market levels are a little scary.
Thank you.
But thank you so much.
That's your coffee.
Thank you. But that apart, I think what's so heartening to see is usually when the foreigners come in, the Indian H&Ws come in afterwards. This time the Indian H&W came in before, and the foreigner is now following, which bodes well for the Indian H&W's wealth compounding.
Speaking of the HNW, the high net worth Indian, let me come down to this. Now, I was speaking to Saurabh a couple of weeks back, and he happened to mention this trend that he's picking up. And I saw that that blog that you folks wrote at Marcellus. It's titled very interestingly. It's the Octopus Ascends, right? That's the
right,
title of the blog. I'm sure you guys can get it on the internet if you want to read more. But tell us about this whole theory. We know that Indians are getting richer, but what are the numbers that made you really sit up and say that, hey, there could be a money-making opportunity here?
So look, part of it was Marcellus's own development. When 5 years ago I set out to build Marcellus, honestly my expectation was we will run a few $100 million for, say, friends and family and a few rich families out there. The fact that in the space of 5 years Marcellus itself scaled to 10,000 clients and well in excess of $1 billion of assets under management, that's when I really awoke to the depth of wealth. The depth of wealth that we are seeing pan out, not just in Bombay, Delhi, Bangalore, but even in, say, places like Indore, Kolhapur, Shiliguri, Raipur, second tier, third tier towns. And as we dug into the subject, the income tax returns were, I think, the next source of data. What the income tax returns are showing is that the number of Indians filing returns of 1 crore or upwards has doubled in the last 5 years, whereas the number of Indians filing returns of 5 lakhs or less is flat over 5 years. And that's when we realized roughly 200,000 families have absolutely killed it over the last decade or so.
You know, this one stat from that blog, it really blew my mind, because that's when you put a number to a trend that you're otherwise observing as an individual. I'll repeat that for the benefit of our viewers, and I'm so glad you highlighted this. Hear this, guys. The number of Indians who have a taxable income of in excess of 1 crore, that number has doubled from 2019, right?
That's
2019 to 2023.
That's right.
So post-COVID, something's happened. What's happened?
So I reckon 3 different things have kicked in, Surbhi. I think first is the stock market itself. So if you look at the data, this is Nifty level data, right? So the overall stock market is up some 17 or 18x in 20 years. So more affluent families who loaded up on the stock market 20 years ago or even 5 years ago, their wealth has skyrocketed on the back of stock market compounding. The second is highway building, right? So in the last 12, 13 years, India's national highway network has tripled. Now, when you triple the highway network, that means any land through which the highway network goes through, the price of that land is basically rising 60 to 100%. So if you're living in a second, third tier town and you own some land next to the highway, your wealth obviously skyrockets on the back of that.
Well, I started my life in New Delhi, and I've seen what happened to Gurgaon, so I'm well aware of that wealth effect that just highway development and the land around it, what that can do.
And assume Gurgaon is now happening all over the nation, right? Because of the highway, right? And the third piece has been, as India's got joined up, not just highways, say airline connectivity up 5x in 10 years, broadband connectivity up 60, 70x, number of bank accounts have tripled in the last 10 years or so. As you've joined up the country, entrepreneurs, businesses in small town India have got linked into the broader economy. So say a Rohit Surfactants, Ghadi detergent, based out of Kanpur, is I reckon now a multi-billion-dollar enterprise, because it's not just selling in the region around Kanpur. Ghadi detergent is the #1 washing powder in all of northern India, right? Similarly, say a firm like say Dainik Bhaskar, based out of Indore. It's the largest selling Hindi newspaper in the country. Again, not just selling in Madhya Pradesh, but in the broader Hindi hinterland. So the joining up of India has given businesses in small town India the ability to go pan-India with their product, and that's created a
lot of wealth, those promoters, those families.
That's right. So these three, stock market, road building, and the networking of India, has created a class of roughly 2 lakh families. These are the people we call octopuses. The 2 lakh families are basically the people who are now controlling economic, political power and financial muscle across the land.
Octopuses, huh?
The octopuses, yeah.
Okay, wow. So the question is, what's the opportunity? How does the average Aam Aadmi, myself included in that bracket, how does one benefit? Are you saying there's a way of making money from those who've already made money?
That's right. So I think you captured it nicely in the introduction. So what we are seeing is across all classes of consumption, right? The product which represents H&W consumption, let's call it class consumption, is outselling the product which represents mass consumption, right? So take a simple example, Birkenstock chappals versus Relaxo ka chappal. So as a erstwhile Sharon and Relaxo, I was only too painfully aware that Birkenstock sales are doubling every year, right? And if you go to say towns like Indore or towns like Raipur, you can see the Birkenstock showroom. The stuff is flying off the shelf. And as a erstwhile Relaxo shareholder, I'm seeing that Relaxo's revenue growth or volume growth is say low double digits at best, right? So similarly, say low-end motorbikes, 1 lakh ka motorbike versus Royal Enfield, right? Royal Enfield 2.5 lakhs outselling the low-end motorbike by a multiple of 3:1, 15% growth versus 5% growth.
Let me just come in here with an interjection. Now, is this just a post-COVID impact? I think some people said that this whole revenge buying, revenge spending will happen because we've bought underwear for too long, and that's when stocks like Page Industries and the entire innerwear sector was booming, because that's all we did in COVID. We were staying indoors. So one sort of counter theory is that maybe this is revenge buying because the pandemic is over and we're back to living the good life. Or are you seeing this as a bigger structural trend, that these expensive bags and these expensive chappals and the high-end luxury hotel stays, is this a lasting trend?
So I think it's a lasting trend. So let's take even underwear, right? So as a shareholder in Page, I'm acutely aware of the fact that through the COVID years, people, as you said, loungewear and underwear sales went through the roof, right? So if you see in the COVID unwind, the undergarment manufacturers who are doing mass scale underwear manufacture, right? Rupa, Dollar, Lux, their profits are down way more than Page's. Page's more expensive stuff, slightly more premium product. Page's profits around 30%, the mass market undergarment manufacturers profits around 60%, right?
One second, hang on, guys. For those who are new to the markets who might not know, Page Industries, you all know what Jockey is, right? Page Industries is the company that manufactures all the Jockey that you see sold around in Indian stores. Because we're trying to make the market cafe very simple for those who are even new to the market.
So nicely put. So in a like for like, whether it is chappal, whether it is undergarments, whether it is motorbikes, whether it is jewelry, the purveyor of class products, expensive products, is doing way better than the purveyor of mass products, right? And now we are roughly 2 years out of COVID. So even in, say, the first quarter FY24 results, this trend is visible. So I reckon this is a lasting change. The fact that in income tax returns, those whose income is 5 lakhs or below, that number's been flat now for 4-5 years. That suggests that in the sort of the more modest income strata of Indian society, the wealth creation engine isn't firing as much as it is in the 1 crore upwards. And that's the trend we are seeking to play. So how can you make money from that? Straightforward one would be Titan, right? So in almost all our portfolios, Titan gets representation. Within Titan, we are seeing that, say, their Riva, Zoya, their premium products are doing really well. Carrot Lane, which is online purchases of jewelry, that's also doing well. One notch below Titan would be Royal Enfield, Eicher Motors, volume growth, revenue growth in the mid to high teens. If you wanted to play through financial services, Kotak has a wealth management and asset management business which is booming on the back of the Octopus class booming. So there are several listed plays. Interestingly, if you are able to play this Octopus theme in congruence with other mega themes, so another mega theme in India is, say, the rise of South India, right? If you're able to play Octopus alongside the rise of, say, South India, if you can make them intersect, then even more money to be made.
You are saying